Hey everybody, what's going on? It is James here with Crypto Common Sense, and in this video I would like to walk through just a simple idea that does not occur to most people, especially people who are involved in cryptocurrency. Certainly did not occur to me when I got into cryptocurrency early on, and so I wanted to put this out there because it might be enlightening for somebody. So the first year that I was in cryptocurrency, I was actually able to turn a very small amount of money into multiple six figures, and that happened in about 7 months, roughly. Most of that was right place, right time. My thought process at the time, I was in my mid-30s, and my thought process was, I want to keep holding this because I only need it to go up about 4x, and it'll make, me a millionaire, like a cash millionaire. And so to me, that was very exciting. That was really my goal, was just have $1 million in liquid cash. And then I thought, I'll use that to go into other business ventures and things like that. That was my mindset. And so because of that mindset, obviously I didn't cash everything out and stay out. I cashed it out and then continued to try to trade. But, being new at trading and not understanding bear markets and market cycles and all these things, I continued to try to trade in early 2018 the same way that I traded 2017, because all of the big talking heads that, I was kind of looking to kind of steer me, which was my own fault, they were all still extremely bullish, and they were giving me all kinds of reasons that I shouldn't be bearish and that I shouldn't sell my cryptocurrency. And, for example, they said that Bitcoin could not crash like it had in the past because that only happened because of Mt. Gox. But in reality, now, of course, we know that's a very typical market behavior for Bitcoin after blow-off tops. They said things like, oh, this is only selling off because of the Chinese New Year, don't panic sell, diamond hands, blah, blah, blah. So long story short, because I was ignorant, I followed this line of thinking and I wrote my portfolio down until I gave back all of the profits that I had made. And that's a really big mistake. Obviously I did bounce back from it, but there's a difference in bouncing back and making yourself whole, which is essentially what I did in 2019, and really setting yourself up for life-changing returns and potentially generational wealth. So I wanted to show you guys this because this didn't even cross my mind in 2017. Okay, let's say that I had cashed out but not put it back in. Let's say that I had just taken my ball and went home. And so ballpark, let's say that after taxes and everything, let's say that I was able to keep $175,000. If I had just taken that money, and instead of being, gambling with it in cryptocurrency, not being a TA wizard, because I wasn't a TA wizard yet at that point. I wasn't, an exceptional trader at that point. I was pretty good with bull market stuff, but that was it. And essentially just not having the power of hindsight, right? Not cherry picking bottoms and things like that. Just taking the 175 and sticking it directly into the broader stock market, something like VTI, which is essentially covers the majority of the U.S. stock market. So this is VTI. It's Vanguard Total Stock Market Index Fund. All right, currently it's about $289. The total market as a whole returned on average over its life about 9%. Okay, so I want you to think about this. At 35, if I put 175 in and I put nothing else in, like nothing, by the time I retired at 67, which would have been 32 years, if I got an average of 9% per year, just riding the typical stock market, that would have ended up being almost $3 million at retirement. In other words, I never would have had to worry about putting a dollar away for retirement again. I could have just put that away and been completely done saving for retirement. Now, of course, if I added to it, say I was adding like $1,000 a month, which is, what most people should be putting away for retirement. On top of that, that means by the time I retired, I would have had almost $5 million. And again, you start talking about generational wealth, right? Because at almost $5 million, if you're smart, you can pass that money down to your kids and they can pass it down and so on and so forth. But even without investing extra money, bottom line is this. I had enough to retire a multimillionaire, and instead I chose to go back into the market with it and I lost it all. So the reason I'm doing this video is because I did the same thing in 2021, except in 2021, I sold almost everything. And then I kept roughly 2 Bitcoin, which I was very public about. I said, I'm going to keep about 2 Bitcoin worth of cryptocurrency in case I'm wrong. At the time, when I did those videos, I had about 102,000. That's about what 2 Bitcoin was worth, was about 102,000 US dollars. So same thing, say 102,000. If I just cash that out, let's just say easy math, I had $60,000 after taxes, which it wouldn't have been that bad because those were long-term capital gains. But again, say 60,000 is what I actually kept, right? Invested in 2021. That would have gave me about 26 years to retirement, or I guess about 28 years to retirement. I don't know why I was thinking 26. So 28 years to retirement at 9%. Again, that would have been worth about $670,000. So in my mind, I was risking, 100K in case I was wrong. But in reality, I was risking almost 700K, right? And probably, again, even more than that, because after long-term capital gains aren't near as bad as regular employment and self-employment and all that other stuff, right? So this probably would have been more like, say, 75,000 maximum after state and federal. So like really I was risking over $800,000. And I know that not everyone will agree with looking at it that way, but you really should consider this point of view. And I'm not saying you should sell anything right this second. That's not what this is about. I'm saying when you get to the point where you're ready to sell, like this is one of the things that you should consider, because I didn't consider it. And of course now after doing this for over 8 years and, studying a lot more on like not just trading, but like I was studying for like my Series 67 last year, Series 65, right? Learning about more like about economics instead of just trading charts. And you do learn a lot of things that you're like, oh gosh, I didn't think about that point of view. For example, one of the things I learned when I studied for the Series 65 was the whole point of the Fed is to manipulate the market, which if I'd understood in 2020 would have been, a very good thing to understand. But just something I want to throw out there. I don't believe I've ever seen anyone talk about this, but just realize that when you're risking $1 in an investment, it's not the dollar you're risking. It's what that dollar will be worth in the future if you just put it in a safe investment. You have to measure your returns not against US dollars, but against what they would be worth in a safe alternative, right? And I say safe, obviously the stock market could crash, but historically speaking, the stock market has never crashed and stayed down. It's always, recovered, although sometimes it does take a while, like the dot-com bubble took 16 years to fully recover. But even the Great Depression, it eventually recovered. And so you have to really think about your returns in those terms. If you're willing to risk $100,000, realize that $100,000 in the stock market, depending on your age, may actually be hundreds of thousands or even millions of dollars that you're risking. So I'll go ahead and wrap the video up there. I know this is not a chart video or even necessarily a trading video, but again, I think this is very important, and I wish more people would talk about the big picture instead of the short term, like instant gratification. The more you can think in terms of delayed gratification, the better off you typically are. And there have actually been studies that support this. So feel free to Google that or ChatGPT studies about delayed gratification and how it impacts success rates in life. All right, this is James with Crypto Common Sense, reminding you all that I am just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice, and you should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, give it a thumbs up. Make sure you subscribe to the channel. As always, please feel free to leave me a comment. I really enjoy interacting with people. And last but not least, please remember to trade safe.